Welcome, Joy, to my podcast. And yeah, just thanks for coming on.
Yeah, no, pleasure's all mine, David. Looking forward to
Right
this.
on. Well, can you tell folks? So my audience is heavily agency folks, usually agency founders and CEOs, those sorts of folks. And you work with a number of folks like that as well. And so I'd love it if you could tell them a little bit more about what you do, and then we can maybe get into more detailed questions.
Yeah, no, sounds good. So, yeah, as I said, my name is Joey. I run a fractional CFO service where I just work with agencies. So I've really just niched down in this space. Still cover a wider range of agencies like marketing agencies, content agencies, more like on the ghostwriting side, some video production agencies, but pretty much everything in the creative side of the agency landscape. And so, as a fractional CFO service, I help them with everything on the financial side. So I really take ownership of that whole process for them, which looks different for every agency. So for some agencies, this is really focused more on the kind of the infrastructure side and just really making sure they actually have accurate financials. For others, this is much more of an advisory role and really looking like how can we use this information to make better decisions and to find better things to invest in, and then how much should we be investing in certain initiatives. And for others, it's really more of a long-term play to like they know they want to sell their agency down the line, and they don't have any real issues now, but they know they will benefit further down if they really take their finances serious and we set things up properly. So it's quite a broad role and different for every client, but so far it's been a really nice journey. So I've been doing this well over a year now, uh, and yeah, definitely looking forward to everything that's to come. And so far it's been a nice journey.
That's awesome. What would you say? I mean, I'm sure at this point you probably have a sense of some of the more common mistakes that
Mm.
agencies are making, and maybe even before, maybe backing up a little bit more, what sort of problems might an agency be having where they think, oh, you know what, we need to talk to somebody who's a fractional CFO because
Mm.
of X or Y?
Yeah. So I think there's a couple bigger themes that I'm kind of seeing across all my clients and just the agencies that I speak with or just know through networking. Um, and I think the first one is that it typically starts by overcomplicating a lot of things as they transition from kind of like, the early stages where it's just like, they're kind of just ignoring the finances maybe completely. And, I think to a certain level, you should ignore the finance at the start and, just first focus on making sales and delivering a good service. Uh, but then as they transition from that, which is typically around like 50K a month, and they start adding some more, more freelancers that are kind of becoming full time, or they even add some employees, that's really when they either start overcomplicating things by building some crazy financial model or just like some manual tracker where they really try and still keep track of all their expenses almost by hand, and just they have the Google sheet with the list of clients, but that just grows out of proportion, and they try and keep it up to date, and it becomes so hard to manage. And then things, you get a refund which you don't take into account. You start invest like you invest in something which you don't include, and like what I usually find, like these sheets, they're hard to maintain and they're hardly ever accurate. And so I think that's where they just get stuck and they just don't know what to do with it. They kind of start ignoring it. And so that's kind of the whole theme around, like, if you don't have the right infrastructure, which it's not difficult to set up, but it's also like if you haven't studied finance, if you don't like aren't in that world, like you wouldn't know what to do, which is like a normal thing. How I don't know how to set up my marketing, and a marketing agency might not know their finances. So I think that's the first theme around, like, they just don't have the right setup to actually use it properly. Um, some other common mistakes, they're more, even if they kind of have the right information, they don't use it typically to actually like look forward. So, I've the most agents I speak with, they're always talking about like, oh yeah, my profit margin is this, or like they know like, oh yeah, my revenue has been like I've added this much in revenue over the last couple months. But then if I ask them like, oh, but like which service lines are actually, the ones that are really driving this, or like how much are you spending on your payroll, or what are your like, are you investing in your marketing? That's typically where the answer falls short. And it's like, well, I think the Google ad service is the most profitable, or like they have some ideas, but they don't really have the real answer. And I think
Hmm.
that just, typically in an agency, you get away with that because it's a relatively high margin industry to have,
Hmm.
where you don't really get punished directly as you would be in an e-commerce business. And so I think it kind of ties to that first point where it's like, if you don't have the right infrastructure, you don't really notice. But then even like just not really having the right, depth of the real financials and the real structure of the agency, which can just make it harder to know like, what strategies should I really follow to take it to that next level, rather than just trying to do the same thing, and kind of let a lot of the little cracks in the foundation start to become bigger over time.
Yeah. It sounds like in a lot of ways, what you're doing is you're kind of being the first line of uh, data that they can help make
Mm.
decisions on their company from. Like I know marketing has different types of data that you can look at to make marketing decisions, but I mean
Yeah.
CFO is almost like introducing data that you can make business decisions based off of. Do we add another head to our team? Do we invest in marketing? What are the
Mm.
things that we basically once we know what our finances look like, we know where we can invest or can't invest.
Yeah, I think that's a pretty good description, because that's also something I had with another client just the other day. We were talking about marketing, and then he was like, "Oh, but that's not really like your space. Like we don't have to discuss that." But like we were talking like about how much to invest in it, and so I think that's a neat kind of a misconception about CFOs or about finance, where it's like, no, it's not just look at the numbers. It covers every department, and so in that it's different from like many other services. Or if you just think about your business, where it's actually, well, the CFO is really more like, how I like to see it, as like an advisor or like a trusted partner to the founder or CEO, where it's like it's not just siloed in one part of the business. It's actually just like, well, you have to make decisions, and I want to present you with like the numbers behind the decisions to actually help you, reduce the need for just doing everything on gut feeling, but understand the whole landscape and all the different moving parts of the
Yeah,
agency.
that makes sense. What made you gravitate towards agencies in the first place? Was that an accident or an intentional
An
move
accident,
there?
yeah. So it's a bit of a funny story, I guess. Because for those that don't know me, like my start was as an agriculture CFO, which is a completely different world. um, and so the story there is that my family, they're tulip growers in the Netherlands, and so that's actually how I rolled into this whole world. It's like, while to go even back further, it's like I worked in banking. And then I kind of started helping my family as they had some issues with their bank. And at that time, I didn't even know what a fractional CFO was, or that people had this as a business. But I started helping them, and I just saw like, wow, like there's actually a lot that they need help with, and there was a lot of things I could fix, but it definitely wasn't like a full time job. Like they weren't at that size yet where they needed a full time finance person. And so I just started thinking like, oh wow, like there must be other farms that have this similar need for just someone to make sure the numbers are in a good spot, and like they can communicate this well to the bankers. Um, and so that's what I tried first. But while I was still working in the city, and even though I grew up on the farm, my heart was never fully in it. And so I just found like I wasn't resonating well with the farmers that I was trying to help and trying to reach out with. Um, which also, like, they were well in their 50s and the 60s. So there was just like a bit of a mismatch there. And so while I was promoting myself as an agriculture CFO, actually my first two clients were agencies that just found me through Twitter, and I guess I just resonated with them as being more of like a younger guy, a bit more like on it, really like trying to help people. And so I started helping them, and that's when things really started to fall into place. So it's like, well, like these guys are almost more like my friends now, and like I feel like I understand their business because like in a way, a fractional CFO service is an agency in the way that it's structured. Like I have all the same challenges that they're facing. I'm thinking about how to sell a service. I'm thinking about hiring people. I'm thinking about just like capacity and just how to like streamline a service. Whereas like I'm not thinking about agriculture or even other industries like e-commerce. Like I'm not thinking about buying inventory. And so it just seemed like a much more natural fit. Whereas like I'm not just telling them what to do financially. It's actually, well, like, I can just like I know I can't just say raise your prices because I know personally what it feels like to try and raise your prices for a service.
Hmm.
And so that's why it was kind of like by accident that the agencies found me through Twitter, but just working with them and then kind of the ball started rolling with some referrals and just me realizing it's like, well, I really resonate with agencies. That kind of brought me into this space, and now that I'm getting more and more involved, it just starts to make a lot of sense.
That's awesome. Do you are there, I guess, are there, now that you are in the agency space, but you're also kind of, you know, working on your own business, are there any specific metrics that you feel like come up again and again where it's like, you know what, like these are good indicators of health, or these are, some specific areas you want to be paying close attention to, because, you know, they're key
Yeah,
levers basically in affecting kind of the health of your business. Like where would you kind
yeah,
of, I guess, encourage agencies to focus some attention?
yeah. So the one that I personally like the most, and that's always like one of the first things I look at because it's also very simple to calculate, is revenue per employee. And so how you calculate this, very simple, just either take the revenue of the last 12 months, but for most agencies that are growing quite quickly, at least the agencies I speak with, I usually just take last month's revenue times 12. So just annualize your current revenue and then divide that by the number of employees that you have, which can also include like freelancers as they're pretty much working full time for you. And so that is a really nice estimate, because it kind of like just shows you like, well, based on the largest cost that you most likely have, which are people, how much revenue are you earning? And so the benchmark here is to have around 100,000 US dollars as the number per person. Uh, and the reason why I like this one so much is because it will tell you a lot of things right from the outset. It's like, well, have you maybe overhired or have you underhired? And like, depending on the level, like how busy are your people right now? Like, do you feel like you could add a lot more, um, a lot more clients with this, or are you kind of already thinking, oh, I need to bring in more people, which then can tell you kind of like how streamlined is your service and your delivery process. And so I've looked at this with over a dozen agencies now, and I've read plenty of other CFOs that use this for agencies, and it's typically always around this 100K per employee. And so I find that a really nice one, as it really tells you like where should you focus on. So that is my favorite because it's also just so easy to calculate. Some other ones that I really like are around the lifetime value, or even better, lifetime gross profit to your customer acquisition cost. So this is probably more in your territory as well on the marketing side, really thinking about this customer acquisition cost. Uh, and I like this one because this is kind of the whole unit economics, if you want to call it, of an agency that you capture in this. Because like the lifetime gross profit, that will tell you if you're pricing your services correctly and if you can retain clients for a long enough period. So it essentially just asks you like, how much are you really earning on the average client? So if
Hmm.
you have a client that pays you 2K a month, he stays for 5 months, that means you have 10K that you're earning from him. And then if you have the data and you actually know how much you're paying the staff to fulfill the service for that client, then you can subtract them to come to like the lifetime gross profit, which is an even better number because that really tells you is like how much do you have left as the agency to invest in growth or pay yourself. So that's a very powerful number to just track on its own. But then if you even hold this against the customer acquisition cost, so just the average cost to acquire each customer, which is also pretty straightforward to calculate if you keep track of the data in a decent way, then you can kind of see like, well, how much are we really earning on that client, or like how much if we invest 10K in advertising or whatever like channels you use to get clients, how much do you then expect to earn back for that? And so the minimum ratio you want to see there is 3 to 1. So if you invest 1,000 to get a client, you want to make at least 3,000 from that client. And so I think those two is already pretty much good enough to really get a good initial sense of the performance. Yes, if you want to add a third one that I always look at is more like the cash that you have to your cost. And this is just a nice metric to kind of see like, well, if something does go wrong, do we have enough cash to cover the cost? Here again, you want to see at least 2 to 1, where it means like if you have, your operating cost of 50K a month, you would like to have 100K in the bank. And so with these three metrics, that's always what I start with, and that really gives you a good overview.
That makes sense. With you mentioned revenue a couple times, and I feel like I've had different conversations where people use different terms when referring to revenue.
Hmm.
And I think maybe that's like maybe there's gross revenue and after providing the service, like what's left over.
Yeah.
Um, what is your professional opinion on like what is your real revenue? I mean, I think it probably is a little bit different too, depending on the type of agency. If you're
Yeah.
selling something where, you're selling, I don't know, paid ads, and it's like there's a cost that they're giving you some money, and then you're spending that on the paid ads or
Hmm.
something. You can't really count all that. That's just going right through you directly to, Facebook or whoever it is.
Yeah.
But yeah, can you talk a little bit more about like maybe the numbers to pay attention to as far as maybe this is more just like I guess finance 101 probably for
Hmm.
agencies.
Yeah. No, this is an interesting one because I really liked this question actually, because this is one of these things where it's like if you're not in the agency space, you won't even really know what's going on. Like when I first started working with agencies and I heard about, I need this concept, which you're talking about, like pass-through expenses, what they're called. I was just like, oh wow, like I never even thought of that. And that is why I like being specialized in this space, because you really see these nuances. But just to answer your question a little bit more detail there, it's like, yeah, so typically if they do pay for the client's ad spend, and also the other big one that's quite common is if you have like white label partners or
Mm,
contractors. So um, one simple example in the finance space, if a lot of CFOs, they offer bookkeeping services, but they might outsource this to a bookkeeping firm. um, and so if those expenses are there, I would recommend to subtract that from the revenue in a way, if you really want to talk about like how much are you earning as an agency. However, how I still view it, and that's mostly because typically what I find is that for most of my clients, this isn't really a significant expense. I still like to see revenue just as how much is really coming in. And then if you want to think of it from like a profit and loss statement, then we just have like that top line number, how much money comes in. Then you have the cost of sales, and that is where you would capture the like client ad spend or white label partners. Um, Sometimes you want like also just your contractors. Sometimes even just your staff members that only work on the clients. I like to put in there, and that just gives you a gross profit, which also is sometimes called like agency gross income. And so that's how I like to see it. But yeah, it can be quite inaccurate to just only look at the top line number. and I especially have this with, in the Twitter space where I'm quite involved. When you see these screenshots of Stripe income, that is very often not a good reflection of what the agency is really earning. Um, Even referral fees is something that can be, and I know agencies who can pay up to 20%, sometimes even more, of the invoice for referral partners. And so, that's really not full revenue what they're earning then.
Yeah, that makes a lot of sense. Well, this has been super helpful. There might be questions that I haven't asked that maybe you hear a lot from some of your clients. So maybe is there a question that you hear a lot that um, you feel like you could answer, and then maybe after that, um, yeah, maybe tell the folks that are listening if there's any, like, what's the best way to find you if they wanted to learn more.
Yeah, no. I mean, in terms of questions, there's always. I think this is just such a personal thing where it's like what one agency owner might be really seeing as a pain point, the other one can disregard completely. One thing that I will maybe say that's worth thinking about if you run an agency or even want to start an agency is really to think about your hourly rate. And so, as if you start to kind of look a little bit deeper into like agency finances or even more on the operation side, you will hear a lot about capacity and utilization and like, really how you can calculate all these things. But I would say that can become very difficult because then you need to start time tracking, which can raise another like whole set of issues. But I think for most of my clients, what I see is that they still don't fully appreciate the value of their own time and even just the time of their team. And I think you don't need to set up a whole fancy model with complex calculations and make your staff track every minute and allocate this to the client. But if you just think like, well, what do you want your time to be worth? Like if you just be more conscious of that when you do things, I think for most, the first thing you'll see hiring a executive assistant is just a no-brainer. Like that can just save you so much time. And even like if you pay like under $10 an hour typically for very capable people, like stuff like that, that can just really help you get to that next level when you do just free up 1 or 2 hours a day to put that time towards something that can really drive your revenue or just the progress. That's very much worth it, and it can become very it's very easy to just get stuck in doing what you're doing. And
Right.
I think that typically finding some ways to buy back some of that time that can be a big game changer.
Nice. Yeah, that's a really good point. Well, yeah, like I mentioned, where can people find you? Like, what's the best way for if they're looking for a CFO or maybe just would like to, learn more and keep up with what you're
Yeah,
posting
no,
online? What's the best place to go?
of course, yeah. So I'm mostly active on Twitter. Just at Joey De Wit _. So should be able to find me there, or you can check out my website, which is dewitco.group.
Awesome. Well, thank you so much, Joey, for coming on, and maybe we'll get to do this again sometime.
Yeah, no, it would be fun. Thanks for having me, David.